Real estate is a risky investment. It's risky to develop land. It's risky to invest in land. Even if you're not going to develop, you're just going to hold it and sell it at a later date. And I've talked before about some of the different types of risk that's involved in real estate. One of those kind of broad categories of risk is what we call government risk, or the risk of government action would be a more accurate term. And so in this video, I want to explain, what does that mean? What does risk of government action mean, and how can it impact your real estate investment or your plans to develop? So I'm going to talk about 5 categories of risk of government action that can impact your real estate. So the first is eminent domain. Then I'll talk about taxes second. Third, land use regulation. Fourth, capital improvements. And then the fifth is government or public use of public land. So each of those kind of 5 subcategories of risk can have an impact on your property, and different properties are going to be impacted in different ways. So let's go through those. I'll take a minute or two and just talk about each kind of risk and maybe give you some examples of that risk from the real world. So the first is eminent domain. So the government has the power of eminent domain. What that means essentially, it's a legal term that means the government can come in and take your private property for public use. In most cases, they have to compensate you for that. They have to pay you fair market value. There's all kinds of issues that go into eminent domain. What does the government think is fair market value? When can they take your property? How much? What's left over, and what is that worth? There's all kinds of court cases about that. But it's a very broad government power. And essentially, if the government wants to take your land for public purpose, they can do that. So that's a risk. That's a risk in real estate. And certain properties are at higher risk of eminent domain than others. So, for example, if you own property next to a busy highway intersection, or next to an airport or a military base, things like that put you at higher risk of eminent domain. So, if a government agency is going to expand a facility, or they're going to redo an interchange, a highway interchange, let's say, things like that can subject your property to eminent domain. The second risk is taxes. So government has the power to tax. That power to tax can have very serious consequences for real estate investments, especially in a place like California, where property taxes are relatively high. Other states like New York and Illinois have high property taxes. So this is less of a risk when you're in a low tax state. But when you're in a high tax state, high property tax state, this is very important. And especially in California, we have what we call Proposition 13, which essentially limits the amount of taxes that you can be, property taxes that you can be charged. But there are certain things you can do as a landowner that can trigger a reassessment under Proposition 13. And that can have huge implications for your tax bill. You can see your tax bill double or triple or quadruple or 10 times go up by a factor of 10. So one of the things we have to be very careful about in California is we have to think very carefully about how our actions in real estate transactions or development impact the property tax rate and the triggering of reassessments under Proposition 13. So property taxes are a area of risk. You never know when property taxes are going to change. They can change the rates. They can change what type of property is taxed. So, for example, right now in California, they're talking about what they call split roll tax system, where commercial property is taxed separately from residential property. I'm not saying that's a good idea or a bad idea, but it's a major change that's going to have an impact on people's real estate investments here in the state. And if you bought a piece of property under certain financial assumptions, assuming that your tax rate would be a certain way, and then the law changes this November or January, next January, that's a risk. So for projects that are, have a smaller profit margin, a real estate project, development project, a significant change in the tax burden on that piece of property can make a project that was once profitable not profitable. So taxes, that's another government action that creates risk for real estate. That's the second. The third is land use regulation. Primarily, that's zoning. In California, that's the primary vehicle the government uses to regulate property. Zoning has a huge impact on what you can do with your land. In fact, most American citizens have much less power over the use of their land than they realize. Sometimes you could even buy a piece of property. It's being used for a certain purpose. So let's say somebody has a small retail shop. You buy that piece of property thinking you're going to run a retail shop, and then the local government comes in and says, "Sorry, you're not zoned commercial. This is a non-conforming use. We're not going to allow you to continue." So zoning is a big deal. It can have huge impacts on the value of a piece of property, and zoning can change. Zoning changes all the time, and there are rules that government agencies are supposed to follow, but they have pretty broad power when it comes to zoning, and their decisions and actions in the land use sphere are hard to challenge. They can be challenged legally, but you have a high burden. You have a high burden to meet to overturn a government decision, and it's expensive to fight those guys in court. So having an understanding of how the zoning works in a local jurisdiction is really important, and fully understanding the zoning for your parcel and how it might change in the future is also important. The fourth area, fourth government action that can create risk in real estate is the way the government makes capital improvements. So that's a large amount of spending on infrastructure. So the way the government spends money on infrastructure has an impact on real estate and real estate values. So for example, if the government decides to close a military base, that could have a huge impact on local real estate values. If it decides to open a new military base, that could have a huge impact, positive impact. If a government decides to site a landfill in a particular neighborhood, that can have an impact. If a government decides to reroute a highway, so let's say you own a gas station on the old highway, and the government comes in and says, "No, we're going to move the highway 3 miles over here. It's going to go around town instead of through town." That can have a huge impact, obviously, on the existing gas station and on a new piece of property at a new interchange on the new highway. So the way government builds infrastructure has huge implications for real estate values. The government, again, has pretty broad authority on how they spend that money, and it can be unpredictable the ways that they do that. So it's important to understand, what type of capital improvements might be made in your area and how that can impact land values, get an idea what that risk is. And then finally, the last category is just basically has to do with the way the government or the public used public property. So I just was reading a court case, came in California a few weeks ago. They expanded a freeway, and there were some properties that were next to the freeway. They didn't get taken for the freeway, but the residential parcels, and there were homes on them, and now there's a bunch of noise and dust and vibration from the freeway, and the court in California basically said, "Too bad, so sad. That diminished the value of your parcel, but the government doesn't owe you any money for that. It's not what we call a taking under real estate law." And so, the way government decides to use its property can have a huge impact. I remember in the not too distant past, here in my community, not far from my home, they decided to buy some government entities decided to build some property and put up some affordable housing, and there was a big stink about that. People in my neighborhood, we live in a relatively nice middle-class neighborhood, people were worried about the impact on property values and increasing crime. So those are very real concerns. The way government decides to use their public property can have an impact. So just to review, 5 government actions that can create risk in real estate. Eminent domain, they can take your private land for public use. The power of tax and the way they tax land. Land use regulation, primarily zoning. The way they spend money on infrastructure, capital improvements. And the way the government or the public uses public land. So you need to think about all those things when you're planning to invest in real estate or engage in a land development project.